Hello and welcome back to Understanding Crypto. My name is Herve, and every other day on this channel, I try to bring you crypto in the easiest way possible on the internet. If that is the type of content you find interesting, be sure to click that like button and subscribe to the channel so that you don't get to miss any other value-packed video like this one. Now, in the last video, we did suggest that Mr. Bitcoin is most likely going to go back up like so. And that's exactly what we see right here, yes? Now, this 69K zone, I had some ideas about this, but I wanted to remain conservative about my targets. But anyway, we did go up as suggested, and we did also suggest that after the move to the upside, there is a good chance that we do come back to the downside. And that is what we are currently seeing right here. The question is, are we going to come down to this zone as we suggested as well? Yeah, there's still a chance that we do that. There's still a chance that we come down as low as this 2.618 right here, which will put us somewhere around 64.3 to 64.2. 64.3 to 64.2 will mark the filling of that CME gap, which we were talking about the other day, yeah? So at this zone, we would have filled that CME gap already. Now, the final flush can take us as low as this 63.9 to 62.2K zone right here. At least that's like the lowest I can see for this particular analysis. And all of that will still keep us above this previous low right here. This has been our point of focus for the past couple of days from our analysis. We suggested this zone right here to be the maximum zone that price would go from this projection to the downside like so. So I'm of the idea that we will most likely have some sort of flush that comes down to this level right here. Now, note that it's all the same thing, yeah? I've already shown you guys the idea on this channel. Price would normally move like so. First wave, second wave, third wave, fourth wave, fifth wave, like so. Now, after that fifth wave, you could have a head and shoulders or a double top. This would be the head and shoulders. And in some situations, you'd have a double top that just breaks down this thing like so. Yes, so double top could be like so or like so. Preferably, you'd want to see a double top with the second top, which is this one, lower than the first top. This gives more power for price to go to the downside. If you have the second top higher than the first top, well, price may not really go as much to the downside. So it's more of the same thing that we are, trading and we are looking at. Yeah. Now, to the downside, price would most likely move the same as well. But if you look at it on the macro perspective, it may look like a three-wave down. So you have first wave and you have a move like so, yeah? However, in this third wave to the downside, you'd most likely see another three-wave type of formation like so, meaning that altogether you could see this thing to be some sort of five-wave structure to the downside. Yeah, so 1, 2, 3, 4, 5. However, if you look at it from the macro, like if you zoom out, you may see it to be like a three waves to the downside. So three waves looks like so. Fifth wave only comes in because in this third wave to the downside, you have three waves dropping right there. Now, if you combine all of that, it would look like so. So if you combine the entire thing, it all joins together to give you something that looks like so. Yeah, so this is the pattern. This is the entire structure that we look at, both in the macro or in the intraday. This is what we look at. This is what we trade. This is what we look for. Inside of these moves to the upside, we have little moves inside of them. So it's mostly like this. Of course, not guaranteed, but mostly like this. So even here is the same thing that we're talking about. What we are actually, like what we want to see is something that looks like so, yeah? So this is zoomed out. You see it to be a three-wave structure. 1, 2, 3. Yeah, but inside of it, you have smaller waves lurking in there. So you have this right here and you have this. This second move to the upside is usually a big one. This zone right here is just like when Bitcoin went to 32K back in 2022 when I told you it was a good time to buy the dip or make a quick buck. Yeah, this move right here is the exact same move as that one. When we had that double bottom and Do Kwon was saying, steady lads, he was buying BTC with USD. Yeah, this is the same move right here. So a lot of people expected that we just go back straight to the upside, and then we started to move to the downside. So it's the same exact thing right here. So around this level right here, I'd expect some sort of retracement back up here, a bit of a retracement, and then a final flush to the downside. That should complete the entire structure to the downside. Ideally, note that we might as well just go up. I'm not saying we must go down. I'm just getting us prepared for, some sort of drop. When you see a drop in the markets that you expected, it does not really mean much to you because you expected it. It's only bad when you did not expect it, when you thought we're just going to go up, and then you see some sort of drop. That now is a problem. But when you expect it, you have the courage to buy the dip because you saw it coming. So it's actually confirming your thesis. Now, we might as well just go up from here because this would be, if that would actually serve as a good argument, that we had an impulse to the upside, we retraced back to the neckline of this double bottom right here, and then we move again to the upside. Yeah, but that same argument could be posed for this structure as well. We'd have a triple top right here, yes, and then a move to the downside. But then moving back into the zone of that triple top should be the retest of that triple top. So ideally, it should go back to the downside. The AB equals to CD pattern would actually work well in such scenario. AB equals to CD pattern, how do we get that? We take from this top to this bottom right here. If I change that to yellow so that you can see it, yellow and bold. If I change that to yellow, so if you put like so, it gives you the zone where price should bottom. So it gives you this zone right here. Now, this is confirming a lot of things. It's taking the CME gap. It's also serving as the first breakout of the symmetrical triangle. First breakout of symmetrical triangle is usually the wrong side. If it breaks out to the downside like so, I would read that as the fake move, and I would be expecting that we have another move to the upside. Now, this low right here is serving as the higher low to this one. So we have a low right here, a higher low. It means we are still in an uptrend, meaning that until we take this low, we have not changed the entire trend to the upside. So when you see these things in a macro view like so, it really changes your perspective. While everybody is afraid, while everybody is saying we are all going to go to zero and stuff, you see what's actually going on. Yeah. Now, if we take this low right here, note that institutions, they also see this. Yeah, so it's not only you and me. They see this as well. So we could still take the low and go back up. So it's not like it's definite that we are going to crash if we take this low. It only increases the chances that we do crash. I hope we all understand. I hope you guys understand. Yeah. If we come down to this level right here, I would be expecting a rebound from that zone. If we do not rebound from there, then again, I will make another video to update you on what I think is going to happen. But if we have a move down here, I would be expecting a rebound. Maybe it swiftly goes below this low and goes back up, but normally going below this low is confirming something else. It's confirming a downtrend. It's putting in a lower low to this one. So yeah, that will not be great. But for now, as of the time of making this video, BTC is still bullish. When you look at it zoomed out, it is still bullish. We don't have any reason to suggest that this is a crash. At least for now, we don't have it. Yeah. Note that on this channel, we don't say what we want. It's not about what we want or what we believe. It is just what the charts are saying. It has nothing to do with our wants and likes. Yeah. I mean, if I was just going for what I want, I'd want it to go up forever. That way my coins can also go up and I make money, and that's it. So yeah, that's basically it for BTC, folks. If we do retrace to this level down here, be it coming down to 64.3, 64.2, 63.9, 62.2, and anything above this low right here, these levels to the upside remain true. Level number 1 is somewhere around 77. Level number 2 is somewhere around 82 to 84. Now, this zone right here is a zone that we have to be watchful for because macro top can come as a result of hitting this zone right here. So we have to be, I will have to update whenever price reaches here. if it can reach here. Maybe we are going to zero and we don't even know it, yeah? But in a moment, I will show you my USDT chart to explain why I still think there could be some sort of real bull market coming. Now, if we do close a daily candle, preferably a weekly candle, but a daily candle above this zone right here will also confirm that we are still heading higher. Well, the highest zone to target from this structure right here will be 100K, yeah? So all of that is still all of that is still working accordingly. Now let's go to USDT dominance. USDT dominance, not USDF. USDT dominance. We will see some interesting things on this chart. Now, on the weekly time frame, what we can see is that USDT invert the chart like so. Now, this is an inverted chart. So up here actually means down and down actually means up. We just invert it because it's easy for every other person to understand what we're dealing with. So what we can see is that we are actually hitting the 1.618 right here. 1.618 at about 4%. That 1.618 is just the reason why crypto has problems going to the upside as we speak. Because hitting this 1.618 is causing USDT to stabilize and potentially move back to the upside. Let's invert the chart back like so into the regular chart so that you understand it. So hitting this 1.618 right here means that USDT could potentially rally. However, we have not really had the final move to the downside. We still have this is the first drop, the second drop right here. I would be expecting a third drop. The only problem that I had with USDT was the stochastic RSI right here, which I would normally expect a rally when I see the stochastic looking like so. But price wise, just looking at the charts, I would have reasons to believe that USDT still moves to the downside instead. So it's a really, really confusing and, disturbing scenario. Now, the final zone for USDT to go to is the 2.618 at the 1% level. This means that the 2.618 level on USDT, which is at 1.07%, could be the crypto market's top, bull market top. This 2.618 right here at 9% marked the crypto market's bottom, and it took me some time to realize this. The reason why it was a lot confusing is because the second high right here is actually lower than this first high here. And in crypto, well, the second high right here actually caused Bitcoin to go to 15K. Meaning that there was some sort of divergence right here. It actually means that the first low on BTC at 17K in June 2022 was Bitcoin's true bottom. And the move down to 15K was the fake move. That's what this chart would indicate, because we see that this second high on USDT right here is actually lower than this first one. But in Bitcoin terms, the second low, which came in November 2022, was lower than the first low. So the second low right here was lower than this first low in June. It means that this second low here was just a fake move. It means that the true bottom is this one. It also means that this type of rally is still coming, because it means that USDT is still going to collapse as much as 75%. Now, before that collapse, we don't really know if this thing is going to retrace back up like so to form some sort of retest, because we have a trend line, yeah? We have a trend line from down here. And that trend line also coincides with the 2.618 right here. So this actually means that we have not seen the crypto rally yet. That's the meaning of this. Now, whether we can get the stochastic to overvalued here is really debatable, to be honest. Yeah, we might as well rally with the undervalued stochastic. That's possible. Hence why I get into some coins, even though I think they could crash. It's because when this rally starts, there will not be any time to buy, which means that your time to buy is in this particular retracement right here. wherever that retracement may lead. The biggest question, and this is what a lot of people will wonder on media, is have we seen the top of the bull market? Yeah? Are we going to see the bull market? Will there be an alt season? Is there anything to show us and prove to us that we are going to see a bull market? Well, this is my own proof right here. This is my own idea of why we should see a bull market, like a proper bull market, like your altcoins do a 5 to 10x easy. This to me is the reason why I dollar cost average into coins. This will be that explosive move, because when you're going from the 1.618 to the 2.618, it's usually very fast. And it's actually the reason why I was telling you about the potential flash crash the other day right here. The move to the 2.618 is usually very fast. It does not give you any time to either sell or buy, depending on your bias. So yeah, that's basically it, folks. That's my own reason why I think, well, I can suppose that we will have a bull market, because I see this 2.618 right here, and I think that going to it will not give you any time at all, which means that if we continue to retrace up here on USDT dominance, yeah, that's the only time you have to buy. No matter how high it goes, it only allows you more room to buy into some of your cryptos, because if this thing comes as high as this level, which I don't have the analysis to suggest that it's going to do so yet, there's still a chance that we go below here. Usually it does not waste time at the 1.618 if it's going to rebound back to the 0.786 right here. Consolidating here could actually serve as this thing's reason to plummet instead. So yeah, as we are here, and if we continue to go up, that's your cue to buy into your favorite altcoins, because the move down to here will not waste time at all. Again, as we start to go down or up, I will update you on the way. But yeah, that's basically the macro picture of the entire thing. Thanks so much for watching the video. I don't know if it was too long or too short, but I hope you did learn something from it, and you know where my stand is as of now in the markets. Again, thanks so much for watching. I will see you in the next one. But until then, stay safe.